Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
You are going to hear now about a couple of companies that are tops in their respective industries from our strategist, Research Director Shiraz Mian, and, believe it or not, Momentum Strategist Dave Bartosiak back in the house with us here. Welcome back.
Yeah, good to be back.
One of your infrequent visits, but always good to have you here.
Yeah, I managed to get through that Illinois border, and here I am.
Yeah. Shiraz, we'll start with you. You're going to look at Goldman Sachs.
Yes.
They got a new CEO, right?
They have a new CEO coming up. The stock hasn't really been doing that good lately. Goldman has historically been famous for its trading expertise and trading strength, and over the past year or so they have lost ground on the trading area. There's this one particular kind of trading area called fixed income currencies and commodities, FIC in short, which has been historically a big source of strength for them: revenue, earnings, cash flows. And as the trading business overall has been struggling because volumes have been on the weak side, volatility has been weak, Goldman has been losing share as a result as well. Then we have issues with the interest rates, how the yield curve, the gap between the short term and the long term has been shrinking. That's bad for business too. So in here I've pulled up the Zacks professional application, we call it the ZRS, and here I've plotted, as you could see, the year-to-date performance for Goldman Sachs, that's the blue line, versus Morgan Stanley, that's the green line, and then the S&P 500, the red line. This is year-to-date. Goldman is down 6%, Morgan Stanley down 3.3%, and the S&P 500 is down 6.8%. I think the long-term outlook for the stock is very compelling, particularly as you mentioned, with the new management team coming on board. Goldman's status in the investment banking and the broader advisory business has never been in doubt. They are making plenty of headway on the asset management side of the business as well. The regular consumer banking end of the business, they have been making headway on that front too, though it's way too small at this stage to make a major dent and move the needle in a big way. But as you could see, going back to the ZRS screen here, it is a Zacks rank number 2 at present, buy rated, pays a nice dividend of 1.36%. And I just want to share one other screen here, which should show you how good the overall valuation picture for the company presently is. And here what I'm doing is I'm plotting Goldman versus the broader market over the last 5 years. And you could see that trading just 9.3 times, significantly below where it's been trading in the recent past. Current 9.3, the 5-year high is 15.5, the low is 7.9. It is even below the 5-year median. So a very good valuation position right now. The earnings picture is expected to improve. It will be a little choppy over the next 6 to 9 months, but if you have a longer term horizon, I think you can come out ahead with Goldman.
They have a good consensus history, though, don't they?
They should do, yeah. They have fallen behind a little bit over the past year and a half, but if you take a longer look, they have been a leader all across.
I'm glad you brought out some positives, because the way you started out there, you had me kind of worried. This is top picks, right? I want to be sure I'm in the right segment. David, Helix Energy Solutions.
Sure. So I like this story, and not because it's a story stock, but because I could tell a little bit about myself, right?
Oh,
so
okay.
I jumped the gun getting into oil E&Ps probably a little over a year ago in Momentum Trader and then even in Surprise Trader. because I thought that, you know, oil had pretty much crashed already and earnings were starting to improve in that sector, in that industry. So I thought it was time to start, you know, pecking at a few of these names in the hopes that we were going to have a really good quarter, because Shiraz's numbers told us we were going to have a great quarter out of the oil. And I got into a lot of these stocks and it just didn't work. So I was early for whatever reason. And I just kind of jumped the gun a little bit. So this is a story about having patience. So for Helix Energy Solutions, what they do is they help service these offshore rigs. So whatever they need help getting the drilling systems back online, if there's little repairs and stuff, whatever it is. Mm-hmm. So as these have come back online with oil prices much higher than they were a year ago, the earnings picture has turned around a little bit. And one way to see this clearly is by using your price consensus and EPS surprise chart on Zacks.com, which I pulled up here. And one thing I say all the time is that price can change on a dime for any reason, pretty much, right? And but earnings trends take a while to develop, and they don't reverse on a dime either. So here you can see 2014 into 2015, just that crash in their earnings, followed by the stock price really starting to unwind. So this is something that you can see develop on a chart over time. And if it's a stock that you love, but these earnings are going against you, then maybe you should, you know, get out of the way, because these trends are going to take a while to develop, right? It's very rare that you're going to see an earnings case where something comes down for a couple quarters and then instantly reverses and goes back to the upside. It just doesn't happen that often. Does it happen? Yes, every once in a while. But the overwhelming majority of stocks, those earnings trends will go in one direction. I think that's why our Zacks rank works so well, because we're looking at these earnings trends that these analysts are changing over time. And then you'll start to notice that the stock kind of troughed, or the earnings troughed rather, 2016 into 2017. But if you'll notice, the price kind of got a little bit ahead of this. It got a little too ahead to the upside and then came sort of crashing back down to the downside. But once this picture really started to stabilize, and it stabilized here into the beginning of this year and so far the first few months, then that's when the stock price really started to take off. So it's a lower risk entry when you wait for the earnings picture to go ahead and smooth itself out and that trend to start to go to the upside. So that's what you have here on HLX, Helix Energy Solutions. If you notice, a few really big beats coming over the last several quarters, and then this gap between those 2018 and 2019 earnings, something you really want to look for, and the fact that that 2019 earnings picture is no longer this U shape. It's actually starting to tick back to the upside. So you can almost take a look at this in, you know, 3 different phases. You have earnings picture getting much worse, 2014 and 2015, then this sort of stabilization that took place in 2016 and 2017, and now the improvement of the earnings picture. And like we were saying, these trends take a while to develop. So it's developing right now, and I expect this to continue over the next several quarters, things to improve for this company. And this is a stock that's trading under $10 right now, and something that can offer pretty decent risk versus reward. Also 27% revenue growth on this one. So things are looking good.
And a recent bull of the day on Zacks.com.
That's right.
Do either of you own either of these?
Not personally. I own Goldman Sachs in the focus list portfolio.
I have Helix in Momentum Trader.
Okay. Well, thanks you both for that. Don't forget, there's always more stock information on the website, Zacks.com. Get over to the homepage and begin checking it out from there. And also more information on our podcast page, too. There's a lot of interesting conversation and a lot of different podcasts on Zacks.com. With Shiraz and Dave, I'm Terry Ruffalo.